All right, ladies and gentlemen, hello. My name is Darius Unchauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Thursday, ladies and gentlemen, Thursday, the 31st of July, the last trading day of July. Look, I wanted to pick up on the US dollar index because, again, yesterday we had the interest rate decision from the Fed. The Fed came out with no cut, no action, basically, and of course that kind of sparked a lot of discussion, a lot of anger, created a lot of anger in the White House. But to be honest, I think everything is working okay. I think everything is on the right track. Look, I mean, of course, there's different sides of the debate. I mean, what to do best, but I think at this point the action that is taken by the Fed, I think it's fine because look, if you're gonna cut right now, we have an overheated economy in a way, I would say, and there's uncertainty and everything is flying high, and you're gonna boost a little bit more to overheat it a little bit more. Come on, like I mean, I think that it's quite wise to wait a little bit because are we in a rush somewhere? Are we? Of course, we know that the current administration is in a rush because they only have 4 years, whereas the Fed has a little bit more than that, or the current the Fed chair. Look, what I can say is that the U.S. dollar met this with positivity. The US dollar bulls rallied here. I mean, enjoyed the moment. We saw the US dollar rallying, yes. And look, from the technical perspective, I talked about this in my previous webinars. I talked about this idea of a little possible inverted head and shoulders pattern with the neckline being around here. So, yep, there we go. We got a nice pop. And what I said that I will be, and I talked about this in my Markets Talk webinar on other social platforms, basically that if we do pop and stay above this 98.65 territory, my next target will be the 100-day EMA. I do have these levels here in play, but look, I think that the 100-day EMA and then maybe the 200-day EMA are both the better options. Long story short, for now, I mean, this positivity, of course, is great for the US dollar, for the US consumer. However, not very good for the U.S. Government because, as we know, they're going around making deals everywhere, and they want to have U.S. Exports a little bit cheaper. Like they want a little bit more attractive for the whole community, for the whole global community. But the higher U.S. dollar is not helping to do that. So that's why we need we need more interest rate cuts. However, in terms of interest rate cuts, I mean, looking at this right now, I mean, September has diminished quite significantly because yesterday Jerome Powell, the way he communicated, it sounded that as if that really the Fed is not in a really big rush to go and cut. So that's why we're only now pricing in one 25 basis point cut here by the end of this year. Of course, we'll see how September goes, but I think I think it became a little bit personal for Jerome Powell, and because I don't blame him. You're getting attacked constantly, and for something that that somebody just wants, and you're getting threatened all the time. So yeah, it's not the best of the scenarios for Jerome Powell. So in a way, he has nothing to lose. Next year he's leaving, and it should be in May. But yeah, I think he'll do just everything what do the opposite what the White House wants. So, however, is this wrong for the economy? No, not really. I mean, look, I mean, inflation started ticking up a little bit. Let me just try to find this year and year. There we go. So inflation kind of ticked up lately, and we're looking at this chart, and I've already, like I said, expressed this several times, that the U.S. headline inflation, year-on-year figure here, if we would do apply if we would apply technical analysis on this, I mean, we see a sharp decline and then a gradual decline, then the greater chance for this one is to break out higher. Um, but again, we're not applying technical analysis on this, but hey, it certainly looks quite interesting. Look, the dollar index, yes, rallied. So now at this point, I would say if we can clear this 100-day EMA here, which is roughly around the 99.72, well, psychological 100 level is the next logical step. Just quickly on pairs, AUD USD. We're seeing a little bit of a retracement today on AUD USD, but we're still below my all my EMAs on the daily chart. So we broke the lower side of this rising wedge. I talked a lot about this. I said that look, if we do break it and stay below it, I'll go lower. And there we go. We went lower, we traveled lower, we fell below all my EMAs on the daily chart. So if we continue to trade below that, yes, my next target is somewhere around here, somewhere around this 0.6366, or you know what? Because it's so there's look, it's never the exact level, it's always the area around the level. So maybe it could be here. Maybe it could be this actually, the 0.6372. You know what? Let's actually stick to something like that. Let's go for this one first, the 0.6372. If we do stay below all my EMAs on the daily chart, and then we'll take from there. Very quickly on USD JPY. So yes, we had a nice rally here. We pushed higher. The problem here is that, look, we had the BOJ coming out. Why is it not? Why is it not updating? There we go. We had the BOJ that came out with the interest rate decision, the same as forecast. Basically, everything's in line, but I think that the market I mean, the BOJ is kind of waiting until we see. I think we see a little correction, a larger correction in the stock market, and which it could come. So this way, we could see the Japanese yen strengthening. Anyway, looking at this picture right now, yes, USD JPY is pushing higher. Let's see if we can stay above this upper side of this kind of rising wedge pattern. But look, if we somehow drift back below it and we stay inside the pattern, then I'll consider some moves to the downside. USD CAD very quickly continues to rally. Of course, yes, great. Even the stronger oil is not really helping the Canadian dollar here, because look, yesterday Canada came out with their interest rate decision, and also again no action, but that didn't really strengthen the Canadian dollar. And on the contrary, I mean, we're seeing some weakness kicking in still. Even like I said, even the rise in oil did not really help out the Canadian dollar here. So this may continue further, maybe a little bit more towards this 200-day EMA initially, around the 1.3890, and then we'll go from there. Euro USD, just a quick glance. Fell off the cliff here. Beautiful boom. Next target is the 100-day EMA together with the 200-day EMA, and then we'll take it from there. And finally, GBP USD. Good move here to the downside. For now, continues to slide, and the next target is the 200-day EMA. Right. So this was just a quick little update after the a little update on the Fed aftermath. There we go. That's the word. These are the words. So yeah, hopefully you enjoyed the session, this little session. Thank you very much for watching and listening. I really appreciate your time, your views, your rockets, your comments, everything, ladies and gentlemen. So let me know in the comments what you think. If you have another different opinion, let me know. I would be very happy to hear that out. So as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.